For those worried about rising interest rates, Coolabah offers some of Australia's best performing floating rate strategies. Now, a floating rate note is a type of bond that has a yield that rises and falls as the RBA's cash rate increases or decreases, all else being equal. Coolabah's floating rate high yield fund is a daily liquidity floating rate strategy with an average credit rating of A+. Today, floating rate high yield's portfolio comprises mainly of bank bonds. Specifically, it is 2/3 comprised of senior ranking bank bonds and 1/3 comprised of Tier 2 or subordinated bank bonds. With the ability to use gearing inside the floating rate high yield fund of up to 75% of the portfolio's value, and given current gearing of around 66%, floating rate high yield is presently paying a gross cash running yield of approximately 8.1%. Over the last 12 months to March, floating rate high yield has returned 11 to 12% depending on the fee class. That return was made up of both yield and also capital gains from what we call trading alpha. The yield component was around 8 to 8.5%, and the trading alpha was about 3.5 to 4%. The trading alpha comes when we apply our many quantitative models to find mispriced bonds, be they in the new issue market or in the secondary market, that are paying too much yield or interest for their risk. And when those interest rates normalise to our fair value targets, we get capital gains that augment the yields on the bond. Floating rate high yield is purely an Australian dollar product comprised only of Australian issued bonds. It has no exposures to bonds issued overseas. All the assets are floating rate. It has a fixed management fee, no performance fees, and offers daily redemption rights. Now remember, past performance is no guide to future returns, and you should read the product disclosure statements to better understand their risks. We also recommend speaking to a financial advisor to better understand your personal needs.